Ready to go. Well, good afternoon. I would like to welcome the participants today to the Brazilian American Chamber of Commerce webinar, The Brazilian Economic Outlook in a Challenging Environment. We are excited to be welcoming Mr. Fernando Honorato. I am Guilherme Gatti, I'm the president of the Chamber, and I'll be moderating the event today. We would like to thank the Brazilian American Chamber of Commerce Banking and Finance Committee, Banco Bradesco, and the Chamber team members and staff for their efforts in putting together this event, and also for the participation of Achei USA and Haya Três. As Mr. Honorato gives his presentation, you are welcome to send your questions via chat, and we will try to answer as many as possible at the end of the event. Thank you all for joining the presentation today. The Chamber of Commerce is working very digitally to bring our members programs that are vital contents to navigate these complicated times. As a Chamber of Commerce, we welcome your participation to our committees, as well as your suggestions to help us continue to grow. Please be sure to visit our websites and call our offices, and we'll be delighted to speak with you. If you want to know more about the Chamber of Commerce and everything that we can do, please come to us. There are many business opportunities that we offer, including exclusive discounts, networking with our members, a lot of visibility and referrals to our many participants. Having the Chamber of Commerce also provides additional credibility as you try to enter new markets. We have some special marketing tools that we can make available to help develop business. And again, any interest in participating in our committees is very, very welcome. Thank you all for participating again today. It's my pleasure to introduce our speaker. Fernando Honorato Barbosa is the Chief Economist and Director of the Research and Economics Studies Department of Bradesco. He's also coordinator of the Macroeconomic Advisory Group of ANBIMA, member of the Fiesp's Senior Economics Board, as well as FUNSEX. Fernando is a guest member of the G100 and one of the chief economist communities of the World Economic Forum. He has held different positions within Bradesco over the past 20 years, and also had experience in other banks such as BBVA, Bank of Boston, and Rosenberg and Associates. Fernando Honorato Barbosa has a master's degree in economics from the University of São Paulo and a PhD in management by the IESE. His academic work focuses on the Brazilian foreign sector and macroeconomic policies from the Real Plan. He's a regular participant in events organized by the Central Bank of Brazil, Ministry of Finance, National Treasury, IMF, and World Economic Forum. I think that keeps you very busy, Fernando. That's really enough. Fernando has articles published in magazines, newspapers, and books in Brazil and abroad, so you still find time to do all of those things. And we are really pleased and honored to have you here speaking with us today. Welcome, Fernando.
Thank you very much, Guilherme. It's my pleasure to join this discussion today. You probably noticed I changed my image here because I've been able to move to my own computer so I can share the charts. So again, Bradesco and the team of the Chamber, it's my pleasure, it's my honor. You've been so kind with my resume. So please, let's just interact. I think this is the most important thing to do from now on. So I'll keep my speech straight. So I'll be talking through maybe 20, 25 minutes. Can you hear me well? Is my sound fine? Great. So I will just share the presentation here in 1 second. So the idea is to discuss the outlook for Brazil with you all and have this time, let's say this 30 minutes of interaction, because I definitely believe this is in this new era of, I would say, virtual meetings. I will not be bothering you with lots of charts and the presentation without giving you the chance to interact with me. So I will start sharing my screen right now. I hope you all can see. I just ask you, please, Guilherme, to let me know if you can see the screen, and then I will start.
coming. There you go. We got
Good.
it.
Is that fine?
Yes.
Great. So I will start right now. Perfect. So guys, again, thank you very much. And we have lots of colleagues from Bradesco here. Maybe afterwards they can do an introduction of themselves. The biggest story unfolding in Brazil is the same one as you see everywhere in the world. It's about the pandemic and how we are managing the pandemic. So I'm trying to separate here in three main phases of this crisis. So the first one is about how the pandemic is evolving and the economic effects of that, how the economy is managing this pandemic. Second, it's about economic stimuli and how much the government is trying to push the economy towards a faster recovery than what we were expecting. And finally, the legacy. So obviously, all these stimuli that we've been seeing in the Brazilian economy, they will leave a very important legacy that we need to attack in the future. And this is beginning to kick into the economic debate. So I will start by economic growth, okay, in this first pillar of the pandemic and how things are moving on. What I should say is that we are really surprised about how the economy is improving on the back of unprecedented stimuli from the government. We're talking not only about fiscal stimuli, but monetary stimuli, but also talking about credit, also transfers for local and state governors. So there are lots of things going on in terms of stimuli in Brazil, and this is helping the economy to have a full V-shaped recovery. You will see that quite clear in the next few shots. But obviously, I need to talk a little bit. I'm not a physician, so I'm not a doctor here. But what I would like to say about the pandemic is you've probably been hearing a lot of headlines about Brazil, but the true story to tell you is that when we compare the number, and unfortunately this is still a very serious situation, but when we compare the number of deaths to the total number of people moving in Brazil, so the number of people that are now effectively out of home, this ratio is improving. So we are seeing less deaths per people moving every day in Brazil. So we are not being able to curb the total number of deaths on a daily basis, but compared to the amount of people that we have today working out of their homes, this is a manageable situation. And second, the Brazilian health system, despite all its weaknesses, we definitely see that we are able to manage the situation without a collapse of the system. So things like you've seen in Italy, in Bergamo, or even in New York, or even parts of France, we've not seen that in Brazil. So my starting point is that we are improving in a path of economic reopening here in Brazil, as in the world too, but in a path of economic reopening that we expect not to see a step back. So we do not expect a second wave. We do not even expect some sort of problems related to that. So with that in mind, let me start talking a little bit about economic stimuli, and there's a lot in here. This is the first time in history, I can assure you, that Brazil has the chance to implement real negative interest rates in our economy. The other moments in our story when we have had negative rates, those were because of high inflation. There was a result of macroeconomic imbalances. Not this time. This time is totally different. What we've been seeing here is very low inflation and the central bank supporting the economy, being able to cut real rates to the lowest level ever. This is already translating into very important sectors, including a house mortgage or real estate, residential real estate, car sales, durable goods sales. They are already performing much better than expected because of all these monetary stimuli. And again, this is surprising for Brazil. We'll have the chance to talk a little bit about the reasons behind that in the Q&A session. Second, this is a very different crisis in terms of its drivers. So, for example, if you compare this crisis with what happened in 2008, or even here in Brazil, 2014 and 16, in those moments, or the banks were undercapitalized, or we had over-leverage from families or companies, and this time is not the case. So banks are highly capitalized in Brazil. We have families with high levels of cash and liquidity. I will show you a chart in a minute. And we also have companies in a very good cash position. So this is not a, I would say, a leveraging crisis or a balance sheet recession crisis. Why is that so important? Because with the drop in interest rates, we are finally seeing credit growing despite the big drop in, for example, in manufacturing production. So banks are supporting growth in Brazil because they have the chance to do that, and companies do not carry on so much debt that would prevent them from taking this money from banks. So this is also an important part of the stimulus that we've been seeing. You can see here for corporates, and here for individuals is the same. So despite a drop in job creation, we see credit growth for families in Brazil. Well, third, in terms of the stimuli, again, I don't know how much you are aware of the size of the devaluation in Brazil. I know you guys follow very closely what's going on in terms of the exchange rate, nominal exchange rate, but I'd like to strengthen your perception when it regards to real exchange rate. So now I discount inflation throughout history, okay? And this is one of the most devalued real exchange rates in our history because of no inflation, of very low inflation and high nominal devaluation. So under this environment of real devalued exchange rate, and together with the stories unfolding between China and US, we've been seeing a lot of deviation of trade flows towards Brazil. So Brazil is one of the single 2 or 3 countries in the world that are seeing a growing exports during the pandemic. So can you imagine that throughout the pandemic, with all the global drop with the drop in global GDP, our exports are growing, and they're doing very fine. So not only because export prices are doing well, mainly agricultural export prices in Brazil, but also because of our devaluation. This creates also a push demand force for our economy and prevents a big drop. For example, those of you that know Brazil in detail probably know the center-east part of Brazil, states like Mato Grosso and so on. So total income of these states of the center-east part of Brazil, the total income has grown during the pandemic because of the effects of agricultural exports towards China and even US. Okay, so all in all, there is another push factor coming from the global environment despite the huge drop in global GDP. And finally, this is a big table. I don't want to bother you with all this information, but it's very simple, in fact. The Brazilian government is providing a huge support for low-income families with money transfers on a monthly basis. This is exactly the same program as you guys have in US, okay? It's 600 reais in Brazil, not $600, 600 reais. But just for you to have in mind, 600 reais in Brazil means 40% of the average monthly wage of a non-formal worker, okay? In some cases, if you are a woman and you have kids, you receive double the size of the government transfer. And it means almost 100% of the level of, it's more than the minimum wage, and it's 100% of the level, for example, of an informal worker. So what does this table has in terms of information? And we can focus on the last 2 columns. It just tells us that despite Brazil destroying 8 million jobs, when you put together labor income plus government transfers, labor income plus government transfers will grow by 10.6% by the end of this year compared to last year. So can you imagine, in the middle of a pandemic, with, again, 8 million people having lost their jobs, the government has been able to more than complement the drop in income that we've been seeing in Brazil. So this is definitely the most important stimuli. I've been talking about interest rates, credit, and external sector, but this is the most important stimuli for Brazil. Well, what are the consequences of this? Some are obvious ones. So we already see retail sales in Brazil. The level of retail sales is already back to pre-pandemic levels. So this is a typical V-shaped recovery. There's no doubt about it. This is one of the strongest ones in the world in terms of already being to the pre-pandemic level. And definitely this is helping support growth of consumption, Bolsonaro's popularity. We'll have a chance to talk about that when I turn to challenges. So this is the typical scenario you can see. Just a comparison with Mexico, and very short here, just for to have in mind the size of stimuli we've been seeing in Brazil. Mexico did the type of stimuli that is 1/5 of what we've been seeing in Brazil. And as a result, the recovery in Mexico is lagging a lot behind the recovery in Brazil. Just a comparison for you to keep in mind how fast we've been able to recover here in Brazil. Well, so now moving to the final part, let's say it's a part of, so stimuli, the pandemic is stimuli, and now moving towards consequences and how we will manage the exit. One thing you could be asking me, Guilherme, is, well, okay, but what about an expected income cliff when these monetary transfers cease, okay? This is a $1 trillion question, I'm sure about that. Banks are concerned about rising NPLs when these transfers are seized. But let me just drive you into a specific analysis here. So, first of all, the pandemic is a different situation for everyone, for all of us, definitely. And in US, you have very good data on families' savings rate. In Brazil, we don't have that. Okay, so we try to figure out how much families are saving through other channels. Okay, so this is just for you to keep in mind. This is the chart of income, the gray line, and the red one is consumption. All right. So the thing is, people are staying at home. They're not being able to consume, and so as a result, the drop in consumption is much higher than the drop in their income. This is just labor income. I'm not including here government transfers. So just for you to have in mind that despite the government transfers, we are seeing some rising savings rate of families in Brazil. In US data, just a comparison, you jumped from 8-10% of
Did we lose Fernando?
Yes, Gui, I think so.
Let's give him a minute to come back. I apologize.
I was telling you that was my problem.
Oh, there he is.
In fact, what we've been seeing is a big change in
Fernando, I think you're cutting.
Yeah, he's offline now, Gui.
Oh, we lost him.
Let's wait a little. Yeah, just 1 second, please.
It looked like there was a power outage.
Yeah, I understand they have been having some power outages in São Paulo, Brazil. So should reconnect in a minute.
In the meantime, if anyone would like to send their questions via chat, we'll try to get as many answered as possible by the end of the event.
Correct. Okay, here he comes.
I'm back.
You're back.
You see, I had a big problem with energy, power energy. I don't know if you saw, it's just simply shut off. Before I continue, let me just try a backup story here. So I will route to my personal mobile phone in case energy drops again. I will have the chance to continue from my... But again, anyway, these things happen. So, okay, now we are fine. So you were probably hearing me up until the moment I was mentioning about the savings rate in Brazil, correct?
Yes.
Great. So what I was trying to say is, okay, now let's be back here. So what I was trying to say is, well, we have definitely the end of the government transfers is a concern. So that was what I was saying. But my point is, because people are at home, they're not able to consume. And as a result, they are saving much more money than before. Again, in US, we have this data, and you saw a huge increase in personal savings rate. Look at Brazil. Brazil, we don't have that data, okay, about savings. What then did I try to do? I tried to pick all bank deposits and money circulating in the economy to try to create a proxy of savings, of personal savings. And this is huge. So it is 8 percentage points of GDP, about 400 billion reais in the economy. So what I'm trying to say here is the following. When money transfers cease from the government, we will have some cushion from this drop in transfers owing to these family savings. And as a result, I believe there'll be a smoothing path towards consumption in the next year or so. So I'm not concerned about consumption by the end of this year because money transfers will keep flowing. By the first quarter next year, I assume the savings rate will be able to compensate for the drop in government transfers. And finally, NPLs or non-performing loans should not be a concern up until mid next year. I would be concerned more for the second half of next year. Well, then at some point in time next year, the beginning of next year, these savings will be consumed because there are no more government transfers. Then what? So the discussion here is about job market, and I need to separate that in two. First of all, when I look at formal job creation in Brazil, the formal market is doing really great. In fact, I have a chart I will skip to just this, and I'll be back in a minute. So formal job creation already recovered from the pandemic. We are already seeing job creation in the last 2 months. And this is because of past labor reform in Brazil. Now, the job market is much more flexible. You can hire people for them to work less than the typical working week hour. So definitely there's much more flexibility and the formal job market is doing fine. I'm just get back to my previous chart. But the non-formal market is in trouble. So you see here, we destroyed 8 million jobs, as I told you, okay? And this is weighing on the economy, and it is not only translating to lower consumption because of the government transfers. So as a result, what we will see in the next few months is probably a huge increase in the unemployment rate. Let me put things in separate speeches here. First, these people, they already don't have income, but the only reason why they are not pressuring the unemployment rate now is because they are at home, so they are not searching for a job. If you are not searching for a job, you are not considered unemployed. This is global, okay? This is not Brazil. This is everywhere. This is the statistics everywhere. So when these people get confident to be back to search for a job, then the employment rate will jump. You will hear a lot of headlines about that in Brazil. What does that mean in terms of income? Nothing. These people already don't have income. They will simply be searching for a job. What does that mean for wages? That means that wages will be tamed for a long time in Brazil, and inflationary pressures will not be weighing on the economy. So I believe that this is much more a political story than an economic story. And I'll put them all together and I'll talk about the challenge again. So all in all, my perception is by the end of first quarter next year, when those savings are vanishing, I hope that we see some vaccine. The governor of São Paulo just stated yesterday that will probably be 60 million doses of vaccine by the end of this year. I'm not sure if that's a reliable statement or not, but he's saying that. He definitely wishes to run for presidency by 2022, so he's putting his head on that story. Anyway, so my perception is that by the first quarter, when the savings are vanishing, we will see vaccines kicking into the economy, and as a result, the job market picking up. If that happens, I don't expect to see a consumption cliff by the second quarter next year. But again, this is an assumption that we need to monitor very closely because of the how the vaccine will evolve into next year. Okay, let me just move to my final part. This is how we see quarterly GDP moving. So this is not very important. Let me just move to the final part. So let's put all these things together in terms of challenges. Well, one of the legacies of these huge fiscal stimuli is that Brazilian public debt will grow very much. We are stimulating the economy as if we were a rich country. We are stimulating the economy as if we were a developed economy, okay? So when you look, for example, remember that comparison of Mexico. When you look, for example, Mexico is doing half the size of the stimuli, fiscal stimuli to be precise, than Brazil. So the consequence is that we will end this crisis, this pandemic, with a public debt to GDP close to 100%. This is very, very, very high, especially for an emerging economy. So this is the most important challenge of Brazil, because if after the pandemic we don't attack the fiscal problem, well, then interest rates will not be able to be at low levels. Then we will see a repricing of assets. Then we'll see a sovereign risk just increasing, and as a result, growth will not pick up. Okay. Well, what is the dilemma here? You could tell me, well, okay, but it's simple. Let's just be back to the pre-pandemic fiscal fiscal agenda. Yes, that could be real, but remember I mentioned about Bolsonaro's popularity. You see, the government transfers are being very powerful to increase Bolsonaro's popularity. So by this time, the discussion is, well, okay, we transferred a lot of money. These people are happy with the government. If we simply stop this money and we are back to the fiscal agenda, popularity will go down in the year that is the year previous to the election. So this debate is running inside the government. I would say things are evolving on a daily basis. Yesterday, we had a very important claim from both Paulo Guedes and Bolsonaro that they will stick to the fiscal adjustment and fiscal agenda. What's very good. That's why markets are reacting positively today. But this is the story, Guilherme. So if we don't manage this, our debt is not manageable. We skip this chart. It's just about some technicalities on how to manage the debt. But if we don't manage the debt, we will have a non-convergent path. In our baseline scenario, either with increase in taxation or not, well, that is a path of a manageable debt. But if we don't keep with the spending cap bill, I can give you more details if you wish at the Q&A. If we increase social programs, as some are saying, well, we need to keep the money transfers for the next year or so, definitely these paths for the debt that you see in your chart, they will not be convergent. So they'll be divergent, and we see what happens in emerging markets that don't take care of their debt. That will be more inflation, more rates, and higher unemployment rate. So that explains why, for example, you see the exchange rate so decoupled from our emerging market peers. But if you look at Brazil, owing to our external fundamentals only, we should see our exchange rate at 440, not at 540. It's one real per dollar higher or weaker than our peers. Okay, this is partially owing to the fiscal concerns, together with the fact that we have this very low interest rate for the first time in our history. Second, that's why we see country risk, the Brazilian CDS, much decoupled from the average of emerging markets. And third, that's why we see our long-term curve. So Brazilian 10-year yields, the forward rate is much, much, much higher than the Selic rate. So while the Selic is at 2%, a 10-year forward rate in Brazil today is 90.5. So it implies some have 100 basis point of interest rate hike throughout time. So these concerns, we will have to live with them up until the moment the government decides to address the fiscal agenda. On the other hand, if they do address, and I believe there is political environment for that, I believe there is political will for that, If they do address, I would see a flattening of this curve that would push investments very quickly, that would push durable goods sectors very quickly, and we would see also an appreciation of the exchange rate. That's exactly what I would expect. So I hope that in the next few weeks, well, we have to send the budget to Congress by the end of this month, by the end of August, the federal budget. So I hope that by the next few weeks, they finally state very clearly that we have this commitment to the fiscal accounts or the fiscal agenda, and then interest rates in Brazil could, long-term interest rates in Brazil could be even lower, and the exchange rate could appreciate maybe to 5.10, 5.20, not just 5.50 that we are seeing right now. So Guilherme, I'll stop here. This is my last table. Sorry for the inconvenience of my energy here, my electrical power. But the thing is, we are very constructive short term. We believe growth this year will surprise average expectations. Let's say minus 4.5. Again, it's a big recession, but it's much less than the IMF, for example, is forecasting minus 90.1 for Brazil. So we are much more confident than the IMF, for example. And next year is, to some extent, an unknown, much more because of the political environment than because of the economy itself. I definitely believe the economy has the chance to grow on the back of this growing job market if a vaccine is existent by the first quarter, and on the back of all this stimuli. We should just not miss the point of the fiscal discussion that is very important in Brazil. So I'll stop sharing here to keep it to 35 minutes. So I think we have a lot of time of interaction. I hope it was useful. So please, Guilherme, just let me know your points and the questions. Thank you very much.
Very much. Thank you so much, Fernando, for sharing the perspective and the outlook as you guys are seeing it. It's been fantastic. I wanted to share with you that a couple of weeks ago, we had the chance to have Roberto Campos with us here on a webinar like this, also sharing, what is it that the central bank was doing and their perspective. Extremely solid and very analytical. It's interesting to see the level of complexity on the models that they use, including how they tie mobility to GDP growth. I think it was fantastic. And one of the things that he said that I kept was that while they think that the central bank has done a very good job with the credits and the monetary policies during the crisis, the main challenge they felt they had, and they still had at that moment, was making sure the money was getting to the right hands. And we know that's not only a problem in Brazil, it's probably many of those developing countries are having those. How do you see that? I mean, yes, the families are getting the money, we're afraid of, when the money will stop, but is all that money really being spent correctly? And how do we know that? How do we see that that's actually happening?
Oh, perfect, Guilherme. That's a very interesting question. So let me just separate families and companies here. So, well, as you said, in the case of families, well, the criteria for you to be eligible for the money transfer is quite tight. So you need to be very poor. You need to have an account. You have to prove you don't have ways to receive that income. So I would say, let's say 90% or 95% the money is going to the right people, in the sense that, well, these people, they are vulnerable. Not necessarily they lost their jobs, not necessarily they needed the money, but they're necessarily vulnerable people at most. I would say 90-95%. Why I'm saying 90-95? Well, again, there are rumors of scandals in Brazil about very high senior government officials receiving the money. It's unbelievable. So about corruption. So I would say maybe there's some stories unfolding. This is public story in every newspapers about how we might see some deviation of the final use of this money. But all we know, I would say 90-95% of the money is definitely going to those vulnerable families. And that's why I believe retail sales are so strong despite the pandemic. Okay, so this is my assessment. Let me put another perspective about companies. And Roberto Campos, we are having huge dialogues with the central bank about this. So I think there are some moments, different moments here. At the very beginning, we were all concerned about the pandemic. So we banks were very, very restrictive, as you know very well too. So we were afraid of not having the money to lend to our clients. We were afraid of not receiving back the money. So we were protecting cash, we were protecting capital. So banks were really restrictive at the very beginning. Well, afterward, the central bank started to ease some reserve requirements. They started to ease some needed capital regulations here in Brazil. So we started to lend, but by that second moment, companies, well, we started to lend by 20% a year, what is very high, but the demand was 100%. So companies were in desperate for cash, and it is understandable. So companies were typically withdrawing money from banks and depositing back, withdrawing their credit line with the banks and depositing back at a bank CD at the same bank, just to guarantee that the money would be available if needed. So we saw a lot of that happening here in Brazil. So there was a perception that banks were not lending money, but the thing was, the demand was double the size than what we could offer and then we could supply. Well, then we have the third moment that is where we are living now. Most of these programs are already adjusted. Companies already are less concerned about their cash position. So credit is finally flowing more fluidly to every company. Having said that, we still have an issue with very small companies and SMEs, mostly to say, there's still some complaints that the money is not getting to them. Well, typically these companies, they don't have a banking credit story. Sometimes they don't even have a balance sheet. So I arguably understand when Roberto Campos says, well, this is still part of the economy not being served by credit or the supporting programs. But this is a small part of the economy. So I believe that with the recent adjustments, they just did a couple of adjustments in these programs the last few weeks, I believe even the SMEs will receive the money in the next few weeks.
Which, by the way, he specifically talked about the SMEs. Fernando, it's interesting that you brought it.
That's and again, we had a very honest conversation here. At some point in time, a very small company knock on your door in the bank and say, come on, can you lend me R1 million or let's say $200,000? Well, I never seen you before. You don't have a balance sheet. You're telling me you are a good employee, but we don't have a single information about them. So it's difficult for banks to just take the full credit risk. So what we discussed with the central bank, well, let's try some risk sharing in this process. And this is working much better now. I think it's, again, maybe people will be sometimes angry about the banks, but again, we are also in a situation where we need to preserve capital too. So this is a very uncertain situation to all of us.
Yeah, absolutely. And you talked about the level of spending that we had in Brazil versus Mexico or even Argentina and other countries to be much higher. And then on top of it, this year, I believe we have municipal elections in Brazil, which usually the level of spending goes up when you have elections. Can it go up even further? I mean, what's the limit?
Great. No, very important point, this one. But in fact, we had a change in legislation in the last 3 years that in the second half of the year of the election, so let's say it's from July this year up until December this year, these municipalities, they are not allowed to spend more than they have in budget. So, and they cannot run out of cash. So truth to be told, by the second half of the year, we are not seeing this further push as you said. But in the first half of the year, we had some, and you're right. So I did not have the chance to say during my presentation, but the government transferred more or less close to 100 billion reais, $20 billion to states and municipalities, and this money is flowing in the economy, and they started spending in the first half of the year. So there is some stimuli definitely, but this is already into the economy, so that I don't expect to see a further step in the second half of the year because of the election. There's a totally different concern would be, Guilherme, if you ask me, okay, is there any chance the municipal elections will affect the way the government will manage the fiscal agenda? 100%. So why? Because they don't wanna, for example, let me be very specific here. One of the most important reforms Brazil need to push would be what we call administrative reform. It's about rescheduling and reorganizing workers in the public sector. Workers in the public sector, they receive a lot of money. The starting wage on their career is sometimes 5-8 times higher than in the private sector. So they need to do a very huge rearrangement that would save a lot of money for the government in the future and allow us to attach the spending cap bill. Okay, so this is a very important reform. Congress is demanding this reform. You have the most interesting time in history, unfortunately, because of the tragic pandemic, to have a narrative and say, you see, while 8 million jobs in the private sector, all jobs in the public sector are preserved and their money and their wages are growing. So it makes no sense at all. So there is a climate in Congress to approve that. But Bolsonaro himself needs to take the burden of sending the bill to Congress and then say, okay, this is my bill. I am authorizing to cut public wages or reorganize the public sector. And again, this is a political burden in a year of election. So I believe this is a risk for the reformist agenda, much more than the expenditure itself, as you were mentioning.
And then when we start talking about, when do you reach that limit in terms of government spend, what is that? And do you see government looking for alternative ways to raise government income, such as transactions, the tax on transactions that are digital, and other very creative ways?
Yes.
Income.
Let me put some things here. Maybe not all of you are familiar with the spending cap, but the spending cap is the legislation enacted back in 2016 that states that the government cannot spend its expenditures by more than inflation. So it's zero real growth of government expenditures. You said, when will it reach the cap? So next year, we will already miss it by 15 billion reais. But again, 15 billion reais in a budget of 1.5 trillion is manageable. So there's no reason to voluntarily break the cap next year, unless the government decides to do so because they want to do. Okay, so there are ways to manage that within the budget. And again, even if they are not able to meet the cap, there are lots of triggers that will allow for cuts in government expenditures if the cap is not met. So that's why the cap is so important. If you keep the legislation enacted, and it's constitutional amendment, so requires 3/5 of the Congress for it to change. If the legislation is maintained, there are lots of automatic triggers that will allow government expenditures to be addressed. So we are not concerned about that. Our concern is exactly your point. So will the government try to overcome the cap or to override the cap by various reasons? And unfortunately, there are parts of the government that would wish to do that. We see a lot of pressure on Paulo Guedes to alleviate on that. But again, it's a constitutional amendment. There's no way to do that without a risk, without first a political market risk. If they go to the plenary and try to approve the end of the cap, that would be a catastrophe for Brazil and for the markets, okay? Second, there is a risk of impeachment of the president. For any reason, he tries to override the cap by whatever means he could be thinking. This could create a legal reason for him to be impeached, as it happened with Dilma. So it's not easy, okay? Having said that, I know the pressures is, well, it's in every newspaper in Brazil, but we know that pressure is mounting. Paulo Guedes is trying to find ways, as you said, to compensate for that. And what is in Paulo Guedes' mind is the following. So he will try to bundle all the social programs together in a single program. And this is a way to enhance the so-called Bolsa Família in Brazil. I don't know if you're familiar. You probably are familiar, but I don't know if everyone is familiar. The Bolsa Família is the regular social transfer program, okay? But it's the amount of money of Bolsa Família is much less than the current emergency transfer of the pandemic. So Paulo Guedes is trying to put them all together and give it to Bolsonaro and say, well, you have here your new social program to keep your popularity rising within the limits of the cap. So that will not change the cap. But Paulo Guedes knows he needs to speed up the growth of the economy. So what he's trying to say is, I will cut taxes on corporates. So corporate tax would be halved in Brazil, but he needs to find some revenues for that. And that's why he's thinking about the CPMF or the transaction tax. Well, this is a very difficult discussion. Congress is not wishing to approve the CPMF. Lots of sectors are against it, but this is an interesting narrative, I would say political narrative. You see, we are cutting corporate taxes. And not only corporate tax, but also payroll taxes. So he would cut corporate tax and payroll taxes. That would allow jobs to be created. And and on the other hand, they would have CPMF. So I don't attach a 0% chance. So in my view, it's 35% chance we will see some sort of transaction tax being implemented in Brazil. Unfortunately, I see it's a growing chance, despite the fact that this is distortionary. The tax burden in Brazil is already high, but they're trying to say, well, this will be neutral in terms of tax collection. Typically, this never happens. So when they change taxes, you end up paying more. But again, I think that there's a chance. And finally, is one issue about the tax reform itself, not only about the transaction tax. There is a very interesting initiative in Congress to do a tax reform that mostly means a simplification of the current tax code. Okay, that doesn't mean I would say it's not a superb reform, but that would create a much better business environment in terms of the simplification of the tax code. And this I'm positive about that. So I hope they move only with the tax reform without raising tax. But again, I attach some chance of rising CPMF again.
And besides the economic impact, we know that it has a political impact as well, right, as the decisions are made. And as we talk about it, we have seen changes in the Ministry of Economy, especially level 2 and level 3. You think they will be able to sustain, and Paulo Guedes will be able to stick towards the end on his position?
You know, this is a question that I need to answer every day. So you can ask again tomorrow and then after tomorrow. Well, I would say just for today, it seems that Paulo Guedes is really fine on his position. I'm just joking, but well, we had very difficult weeks in the last 2 weeks with these exits on the economic ministry. But again, I think well, markets reacted. We saw the exchange rate evaluating. We saw the stock market. We even saw the steepening of the yield curve. And that created the needed environment for Bolsonaro to give a step back and say, oh, you see, I strongly support Paulo Guedes. So the last few pieces of information in this puzzle is that Paulo Guedes is being really supported by Bolsonaro. So again, I think we should put ourselves in the first quarter, second quarter next year. So my sense is I believe Paulo Guedes will survive the current budget month, that is August. Again, I believe after the budget is sent to Congress, all these rumors will abate. But then we need to transport ourselves to the first, second quarter next year. Where will the economy be? Where will the reform agenda be? And where will employment rates be? So I think risks to the economic agenda are more posed to the next year. If the economy for any reason is not picking up, then Bolsonaro will come and say, well, Paulo Guedes, I gave you all the chances you had to improve the economy is not improving, so I'll change the economic policy to try to win the election. Despite this risk, well, depending on the sort of indications Bolsonaro is to give, let's say, 1 year from now, he could even ruin his chances of regaining the election. So my chances are 80%, 70, 80% that Paulo Guedes and the economic team will be with him up until the end of the mandate.
We'll ask again tomorrow.
Yes, please do that.
Ask again tomorrow. Fernando, I had one question here. Actually, somebody asked me to ask this question. It's not my expertise, but it is about your industry and the growth of digital financial platforms, the fintechs, and all of that. How do you see those developments affecting the banking industry in Brazil?
Perfect. No, very interesting. So, first of all, Brazil is booming in terms of the creation of these fintechs, the creation of these new platforms. It's impressive. I typically like to separate in a couple of aspects here. And sorry, maybe it's too technical, but I think it's worthwhile. So first we have distribution of assets, okay? mostly in that case, we've already seen a huge transformation, and that's much more linked to the user experience. It's not because we at the large banks did not have the products. So if you look at Bradesco's portfolio or Itaú's portfolio or a competitor, in the past we already had all the funds, the mutual funds, the products that a client could have access through our platforms. But we should recognize and be and understand that, well, these new platforms, they were able to provide a very interesting user experience, and they are booming. Okay, I include here Bradesco's Agora, XP, so XP from Itaú, so they are gaining some market share. But again, this is not a real fintech typical sense. So what they are doing is simply just selling securities to clients in a very useful, we should recognize again, very useful way, and Bradesco is doing that with Agora. So the second aspect is about credit. So when I look at credit itself, again, Brazil is quite unique in terms of the credit market because of high spreads, because of delinquency. When I tell people that delinquency of credit cards in Brazil is roughly 30%, some of my colleagues in US, they simply just don't believe. When I tell my colleagues in US, they say, okay, we sell motorcycles, financed motorcycles. Try to go to the, and again, it's not a prejudice, guys, sorry, don't get me wrong, but try to go to a favela and recover your collateral, the motorcycle, from the guy that's not paying you. It's absolutely impossible. So there are lots of, I would say, characteristics that make Brazil unique in terms of credit. So credit is still a story for banks with huge capital and huge experience. So I believe the fintechs, they have room to grow here, but this should be, we should be seeing that in small steps. Again, I worked for, well, two very important international banks. I worked for Bank Boston, that was bought by Fleet Boston, okay? And I worked for BBVA here in Brazil. These two banks were absolutely unable to compete. And we had Citibank in Brazil, we had, I don't know, JP Morgan, all the big names in US. They already played a key role in Brazil, even at the retail, and they are gone, exactly because of these specific issues. So I think fintechs will help make this environment better, but I don't think it's that much disruption. And finally, about payment systems. So payment systems is a disruption, okay? We are already seeing that not only in Brazil, but in most countries. Here, I think not only banks, but all payment system companies, they need to be prepared. The Brazilian Central Bank is about to launch Pix. I don't know if you are aware, but Pix is an instantaneous payment system, able to transfer money at the weekend from one account to another one without going through a bank current account. So I expect a revolution here in terms of payment systems. But anyway, banks will have to be ready for that. And an overall assessment would be, I see fintechs today as much more as a complementary part of the banks than a huge competitor. What's typically happening is that banks go and buy a fintech solution to improve their business model, to improve the way they do business to clients. Truth to be told, and I will stop here with this answer, is I'm much more concerned about the big techs than the fintechs. I think regulation about the big techs and how this thing will evolve in the world should put banks more concerned than the fintechs itself. You're mute.
Sorry, there was a question actually coming from the audience, and it touches on transactions and payments and cyber currency, wealth transfer, you know, and what's changing in that market?
Oh, perfect. Again, I think the revolution will be by the end of the year. If I'm not mistaken, it is November the 15th, November the 20th, the central bank will launch the Pix, so there will be a huge transformation there. I am not a particularly fan of digital currencies as a substitute for sovereign currencies. I'm an absolutely fan of bitcoins of blockchain, not bitcoins, of blockchain as a means of payment and simplifying means of payment. But well, I can send you. I wrote an article 2 years ago about bitcoins and digital currencies. I think it's quite hard for me to believe, to see sovereigns just replacing their own currency for Bitcoin, Facebook currency, again, because they lose the possibility of managing monetary policy. And this is critical. So we still do not invent a way that these digital currencies would allow governments to implement efficient monetary policies, for example. So I think it's much more a matter of macroeconomics than the technology behind. Technology is brilliant. Again, blockchain is brilliant. It could create a revolution in most sectors. But digital currency, I'm not a spectacular fan. What does not mean, for example, Brazil will have, the Brazilian Central Bank will have the Brazilian real, the Brazilian digital real, for sure. This is happening. This will happen in a couple of years, I'm sure. Some countries already have, like Sweden, for example, they already have their electronic currencies. But I believe this will happen in the scope of the sovereign government and not in the private universe of digital currencies.
Yeah. And you touched on a very interesting point about the foreign market and how exports have grown. And just speaking from the FedEx side, we are seeing backlog of freight out of Brazil, out of Mexico, out of Asia and Europe. So it's quite impressive how we are seeing the growth of the export market from the different countries, even though their domestic markets are, going through so much trouble. Quite interesting.
No, again, maybe it's China. I don't know. Maybe it is. I do not have the chance, Guilherme, to talk a little bit about the global economy. Obviously, maybe my value added would be on Brazil. But the thing is, we have unprecedented stimuli everywhere in the world. In US, it's even comparable to what we've seen in the Second World War. So it's a lot of money flowing. So to some extent, and I understand, again, I defend when the pandemic started, we had a big discussion in Brazil. Well, should we protect the vulnerable families or not? I said, well, definitely we need, because we were preparing for, I would say, a nuclear bomb. That was the expectations before or during the beginning of the pandemic. Now we know, okay, that was not that huge. There's a big dramatic story, but not to the extent that will put the economy down by 10-20%. And now we should think of removing this stimuli, but it's understandable. So there's a lot of money. You see the Federal Reserve, for example. I have a chart when I talk to Brazilian clients that shows the expansion of the balance sheet of the Fed. And the Fed is expanding its balance sheet by triple the size of the expansion back in 2008. And back in 2008, during the financial crisis, that money, that expansion, was recycled in banking deposits at the Fed. So the Fed was expanding its balance sheet, banks were shrinking their balance sheet and depositing back its money at the Fed. Now, this money is flowing towards the Treasury, is flowing towards Treasury government expenditures in the US too. That's why, for example, the US CPI last week just rose by 0.6. So a different situation. There's a lot of money financing government programs. So I think the reason why you at FedEx is seeing this backlog is because of that. So we were preparing for a nuclear bomb, and fortunately, this is not evolving that way.
That is right. And of course, the growth of the Brazilian and the US domestic e-commerce, that's happening in every domestic market, which is a very different operation than what these companies had today. Fernando, we're getting close to the hour. I have here that one multi-million-dollar question for you. Where do you see the exchange rate at the end of the year?
You see, I'm having problems with my light again, so it seems I will not be able to answer you. You see, I'm not hearing you well. So you see, Guilherme, again, it's always a joke to talk about the currency, exactly because it's very tough for us to do this forecast. But the thing is, when we look at fundamentals, at external fundamentals, you see Brazil will run a 0.5% of GDP current account deficit this year. It's the lowest current account deficit in the last decade, okay? We are receiving, roughly speaking, 1 to 1.5% of GDP in terms of foreign direct investment, still receiving. We already seen a lot of outflows from Brazil. So all fundamentals tell me that we should see an appreciation of the real, so a strengthening of the real. When, for example, most clients challenge me, well, but what about interest rate differentials? I understand. Brazilian families are not used to having US dollars. They're buying some assets, US assets, mostly homes in Miami and Orlando, but they're buying some foreign assets. But again, this is a portfolio move that at some point in time it will stop. So my sense is that if the government puts in place a decent reformist agenda, as the one we were seeing before the pandemic, I would expect the Brazilian health to strengthen. Okay, maybe not the way I was expecting before, when the interest rates was 4 or 4.5 here in Brazil. Now it's 2%. But at least to, let's say, close to R$5 per dollar, I would expect. So we are betting on 5.10 by the end of this year and the end of next year. You had a chance to see on my charts that I would say everything. Yeah, please don't take notes. Don't. If you see on my chart, if we were to do everything the right direction and start hiking rates by the end of next year because inflation is picking up, I would see the exchange rate at 440. But I think it's smart to be cautious here than, let's say, maybe 510. And again, you see my answers. If we do everything the wrong direction, that is not much a limit. We've seen the currency at close to 6. It could go even beyond. If, for example, Paulo Guedes leaves and we abandon the fiscal agenda. But don't get me wrong. I know the range is very large, but the thing is, let me just put a country in comparison here. And again, nothing against my colleagues in Argentina, but it is a totally different story from Argentina. Argentina was in external default. Argentina had no foreign reserves. If we devalue our currency because of even our local mistakes, there will be a devaluation at a point that will be positive. We'll have a surplus in our current account. Our reserves, let's say the exchange rate goes to R$7 per dollar. Our reserves would be enough to pay maybe 25% of the public debt because of the devaluation of the currency. So I see there are limits to the devaluation. Obviously, in a week of tensions in markets, we will see more devaluation, but our sense is that it should appreciate further from the levels we are seeing here. And please don't take notes. Don't ask me that again in 6 months.
Actually, we have people asking for the presentation. So
sure.
And I don't know if it's public, but you know, anybody interested, you can contact our staff at the chamber, and they will kindly help.
It was made for you. It's your material. Please, it's my pleasure.
Thank you so much. We got on the hour. It's a pleasure, an honor. Thank you so much, Fernando, for spending the time with us today, sharing your vision or your perspective. I'm sure every participant not only enjoyed, but also learned a lot with you today. The chamber's doors are always open. We really appreciate you coming. And guys, Fernando, Honorato, Barbosa, thank you so much.
Thank you very much for the partnership. You guys, very important to us too. Please just count on us. Thank you very much for the invitation.
Thank you, everybody who participate. Appreciate the support of our great staff, and we'll see you guys on the next one.
Bye-bye.
Thank you.